Hello and welcome to Business Today Television. I am Siddharth Zarabi and you're watching Easynomics. The monsoon has been forecast to be an above normal one this year, and that perhaps may dispel some of the dark clouds that seem to be hovering on the horizon for the Indian economy. Be it the escalation in the conflict in West Asia, with Iran getting involved in attacking Israel and the fears of retaliation from Israel to that, the overall impact of the continuing turbulence that we are seeing as far as interest rates are concerned, with inflation remaining little higher than expected in some of the Western advanced economies, and therefore the question marks on interest rate cycle changes. Domestically also inflation and its ongoing trajectory, but the big impact on possibly on account of an increase in crude oil prices. All of those perhaps being in context to the question that we are asking and posing to our experts on the panel today: will a good monsoon and the possibility of continuation in our political setup, in our government framework, lift the Indian economy and Indian stocks going ahead? And joining me on that subject are some very eminent guests: Sudip Bandyopadhyay, the Group Chairman of Inditrade Capital; Dr. Sunil Sinha, Director and Principal Economist at India Ratings; and Rumki Majumdar, Economist at Deloitte India. Thank you very much for joining in. I'm going to first get straight to Sudip for his views on what's been happening in the market these 2 days, this week, and the sense that you're picking up, Sudip, as far as the market is concerned. Is this just a correction that was overdue, and the troubles in West Asia and the fears are just a necessary trigger for a correction?
Well, of course, correction would have happened and should have happened at some point of time. After such a dizzying rally, a bit of consolidation, bit of profit taking, bit of correction, whatever name you call, is par for the course. But I don't think, Siddharth, what is happening is just that. I think the larger geopolitical conflict is playing a significant role in this correction. This also, you have to couple with the fact that the expectation around US interest rate reduction is to an extent subsiding in the background, with strong inflation numbers and also strong economic data coming from US. The need for US Fed to cut in a hurry is not being felt. And probably that also is one of the reasons for making the investors, global investors, bit risk averse. So two factors. One is, I think, the geopolitical issue, Iran and Israel-Palestine conflict. Ukraine and Russia is already there. So this overall geopolitical scenario is not good. US interest rates are not coming down. These two factors are the major factors in kind of spooking the mood of the global investors. One small other trigger happened with the Mauritius Treaty changing and the uncertainty around the Mauritius Treaty, which also acted as a one more element in this uncertainty bit. So I would say that yes, correction was due in the Indian market, and it had to happen, and it's not bad to happen. But the triggers which came were not expected and a little unfortunate at this point in time. Of course, Indian markets in future, apart from these factors and resolution of some of these factors, will draw strength from corporate results, which have started coming in. And as you're going to talk about monsoon quite a bit. Of course, about the progress of monsoon, the quantum of monsoon, distribution of monsoon. I think these are the things which the market will worry about, along with corporate results. And of course, somewhere in the background, election is also there heavily, and that also will be watched carefully by the market.
Absolutely. We are 16 days into the new fiscal, and perhaps the best news so far, Sunil Sinha, and I'm coming to you, is the monsoon forecast. Viewers, the first long-range southwest monsoon forecast of the IMD for 2024 says that rainfall is seen above normal in the year and at 106% of the long period average. Remember, 96 to 104% is considered as normal, and the El Nino conditions are expected to subside by June, and La Nina conditions to develop in August and September. So somewhere midway, the conditions towards a El Nina will come in, and that also will have a subsequent impact. But Sunil Sinha, considering what has happened to agriculture and therefore agriculture production and consequent prices there due to an uneven monsoon in the last 2 years, how significant is this forecast to deal with the agriculture sector and the consequent spillovers that we see as far as our inflation dynamics are concerned?
Siddharth, I guess the news is very, I would say, encouraging that IMD is predicting, higher than a normal monsoon this year. And as you rightly said, that last 2 years hasn't been very good so far as monsoon is concerned. I guess more important to watch would be that despite less than normal monsoon last year, the Rabi crops are going to be, on the expected line. So that is the first thing that is going to impact the rural economy, or for that matter, the agricultural output. And the second is that on top of that, if you are going to have a more than normal monsoon, that is another good news that may actually translate into a good Kharif harvest this year. So 2, 3 consecutive good harvest means that the kind of distress that we are currently witnessing in terms of rural demand, that might get corrected, and that in a way would be an extremely good news so far as consumption demand is concerned, because we have seen that the current GDP growth is largely driven by the government investment, not so much by the consumption demand. And within consumption demand, it is mostly the urban consumption demand, not so much the rural consumption demand. So this correction, which one is expecting or hoping will happen with the normal or more, above normal monsoon, is certainly a very, very good news, not only for the overall economy, but I guess getting the balance of the overall growth process right.
Rumki, the hopes that our rural consumption will pick up if the monsoon is good as is being predicted, and therefore it will spill over into rural demand coming back on track. But is the bigger fear a rise in global crude oil prices and its impact on India? Remember, it's now the 2 years exactly, 6th April 2022, when the last petrol diesel price changes had happened as per the old system, and basically pump prices have been frozen for almost 2 years now. But despite that, do you see crude oil prices being the biggest dark cloud on the horizon?
The uncertainties because of the geopolitical situation that we are seeing here could have an impact on oil prices, and we saw oil prices go up to $91 per barrel just a week before. What the latest crisis will bring in is yet to understand how it is going to impact. But what we believe is that given the way the other countries have responded to the attack, Iran's attack, and they have like Jordan opened up the airspace for Israel to respond. All these are kind of indication that in a way the world wants this war to kind of end, and this might have an impact on how the supply chains will get interrupted, because so far a lot of interruptions have been happening at Red Sea, and a lot of impact because of the Middle East crisis. But and this may continue for a while, but I think investors have also kind of factored in that aspect that this is going to continue. But there is an intention among the countries to bring this down. The US has been talking to Israel not to escalate the matters. So I think all these factors will probably keep the oil prices from fluctuating too much, and we believe it may remain contained and may not spike. the risk where I see is that dollar is suddenly appreciating quite significantly over the last few months, and that may have an impact on how our exports and imports will actually impact, plus capital flows as well, because what we have seen is given the US economy has been extremely strong, dollar has been rising, there the capital flows have been kind of reversed that way, and there are expectations that the Fed may not cut rates as much. These will be the other challenges that India might be seeing going forward.
Okay, several of those points resonate with our viewers, and just for the record, there's been an increase in absolute terms of $6 to the barrel between 20th March to 15th April, from $85 to the barrel to $91. So you are already seeing, viewers, oil prices going up, and perhaps very soon, as per one forecast, we will see within a month, in less than a month in fact, almost 10% increase in crude oil prices, and that cannot be good news, because the fact that petrol and diesel prices are not fluctuating so frequently at the pump level is to do with both the companies and the exchequer bearing that brunt. Sudip, I'm coming back to you. There are 4 M's that we have sort of touched upon so far. One is the Middle East crisis. We've touched upon the monsoon. We've also briefly alluded to the Modi magic. I want to add manifestos as the 4th. From a market point of view, in these 4 factors, what will be the single most important one to determine the trajectory of the market, at least up to the 4th of the June when the election results are announced?
Well, I think the most important thing, if you ask me, will definitely be the Middle East. I think that conflict is the biggest challenge for an economy like India. We know India is the imports most of its crude oil, and as an importer, which is having a significant impact on its economy, balance of current account balance. I think every $10 oil price going up has an impact, significant impact on the GDP and the current account balance. So I think this is what we need to watch very, very carefully. While we have managed till now, but I suspect that as and when oil nears 100, if at all that happens, I think the stress and strain will start getting felt. So we have to watch the Middle East and the oil price movement predominantly very, very carefully. That's the single most important factor, no doubt. Close second will be monsoon, but the number one I will keep from a market's point of view, definitely Middle East, because of oil. Monsoon has its impact definitely also, Siddharth, because rural economy, as some of my co-panelists have been mentioning, have been suffering for quite some time, and the rural stress can only go out if we have a good monsoon with good distribution and quantity. So we have to be cognizant of that. And there is one more thing which we have been talking about. All this growth in India has been, to an extent, front-ended or pushed by the government, by capital expenditure, government spending money. Private sector has not been doing capital expenditure, and that's the standard statement we keep hearing. But we have to remember, private capex is related to consumption demand increasing. If consumption demand doesn't increase, private capex doesn't come. So we may keep talking about private capex and balancing things, with government and private sector both spending money, but private sector will not come and spend money unless there is a demand, and that demand has to come. Demand can come only when both rural and urban demand comes, and monsoon does play a very, very important role there.
Sunil, from your experience and recall, if the monsoon prediction pans out and therefore we see that agriculture stress is reduced, how soon will rural consumption come back on track? In the past, have you sort of seen how quick the response and rebound is, or will we have to wait, because the agriculture sector has taken a beating for the last 2 years, so we should not expect perhaps them to just jump up back up at the snap of a finger?
Yeah, you're right there, Siddharth. Just one good crop or two good crop may not really lift the mood of the rural economy, or in other words, it will not, or it may not translate into a significant jump into the rural consumption. What we have observed is that if you have at least 3 to 4 consecutive good harvests, then that certainly translates into a significantly buoyant rural consumption. By this, I'm not saying that one or good harvest will not do anything to the rural consumption. It will certainly make a difference, but the kind of fillip that some of the FMCG company, or in general the economy, is expecting with this normal monsoon, or 2 or 3 consecutive good harvest, may or may not translate immediately. It will take a while, but certainly some of the goods which are consumed on a daily basis, and produced by the FMCG, they may get a leg up, but say demand for two-wheelers, demand for tractors, etc., may take a while to really benefit from the normal monsoon. Or in other words, what I'm trying to say is that if there are at least 3 to 4 consecutive good harvests, then it will certainly you know give fillip to the overall rural demand.
Rumki, while we are talking about overall good above normal monsoon, we have also seen in the past that when the monsoon in quantum terms is good, there is issues around unevenness and the spatial distribution. Even in the latest forecast, the forecast for east and northeast of India isn't that good. But the question that I have for you, does this mean, Sunil said 3 or 4 harvests, does this effectively mean that in the upcoming budget in July and therefore up till the middle of next year same time, it is the government which will continue to have to bear the burden of keeping the engine running?
So with the forecast, well, they have predicted an above normal for rainfall. It is also said it will be quite equally spaced. So that is also a good news in a way, because then it means the government might have lesser pressure to keep the subsidies, or even open up exports for wheat, and if the production improves. So so not just above normal, but equally spatial in rainfall is extremely needed. And if that happens, then I think the concern that you raised may not be as big a problem. But the government will be keeping an eye, and as Lord Kane says, as data comes in, we change. As the facts changes, we change our analysis. So that is something which I think the government will also be doing. So more importantly, we have seen that inflation in India has mostly been driven by food and fuel. And the fact that food prices have been consistently very high, while core prices have been declining over the last few months. If food prices continue to remain high, it will start impacting the rural demand again, because of the purchasing power, and the urban economy as well. So all fingers crossed. Let's hope that the rainfall is normal, above normal, and equally spaced.
Okay, there is a fifth M, viewers, that we can introduce to the mix, which is the MPC, because we'll have to wait for what the Monetary Policy Committee mandarins decide to do, and they have lots of data to digest. But Sudip, to you, in this scenario, what would you say is the best approach towards the markets that the average Joe in India should adopt today? Is there a sectoral theme that you see at play where investors can sort of try their luck, or is it that you just have to wait and move with every single news flow event?
Not really. I think, Siddharth, there is definitely a theme, and an investor can pick up a few themes which are there in the market, and where we strongly believe that this is a multi-year trend. One is in front of all of us. Look at the infrastructure and construction activity happening all around us. whether you are in Delhi, Mumbai, or Bangalore, Hyderabad, any major city, any major town in India, you can see the amount of construction work happening, amount of infrastructure which is being kind of prepared. So under the circumstances, the construction and infrastructure companies will definitely benefit, and they are already benefiting. The order book is full, and they are executing at a frantic pace. Balance sheets have repaired quite a bit for most of these infrastructure construction companies. The margins have improved, and I think next 5 years is going to be good for infrastructure and construction companies. So pick up any good infrastructure construction company, and I think there's very little chance of going wrong. Now, of course, I will advise the investor to do a bit diligence on the credibility and track record of the promoter, but there are enough and more good quality promoters, including large conglomerates, which are leaders in construction infrastructure. That's one theme. The second theme I would say is that power. I think this is another sector where there is massive amount of work which is happening. Electrification has happened in true sense of the term. Every single nook and corner of the country is getting electrified. The power demand is soaring. Under these circumstances, every single area of the power industry, whether it's a producer, a transmitter, or your component supplier, or your some other ancillary industry, or a financier, you are benefiting. So pick power companies, power ancillary companies, power sector related companies, and again the theme is multi-year. You can't go very much wrong. Of course, look at the balance sheet, look at the credibility of the promoter and the company, but I think you can't go much wrong. Defense and railways are also two good themes, but I'm not recommending there because the valuations have reached a level which to us seems a little unsustainable in the near term. So I would refrain from recommending defense and railways, though huge amount of work is happening. The companies are good, order book is full, but valuations don't support buying at these levels.
That's a very good summation. Sunil, will more than adequate monsoon showers cool down the tempers within the MPC and improve the mood within the MPC whenever it meets and deliberates the course of interest rates next?
Siddharth, if you read the RBI commentary, then it is very obvious that time and again they have been flagging inflation, and within inflation, the food inflation as the major worry areas. Because, in an entire year, monsoon is just about 3 to 4 months event. And certainly the Kharif crop depends on that. And a lot of our food grain production that we accumulate over the year has something to do with the monsoon. But let us not also forget that climate change has emerged as a major area of concern. And this climate change, what it is doing is making the overall production of fruits and vegetable very uncertain. I mean, it may not be getting reflected in fruit prices so much, but it's certainly getting reflected in the vegetable prices. So unseasonal rain, unseasonal, damage of vegetable, etc., has more than often, spiked the downward trending food inflation. So RBI has been watching this space for last several years, and in their narrative, it is becoming clearer and clearer that just bringing down the cereal inflation is not going to make much of a difference to the overall food inflation, unless and until we have some handle on other food items as well. So food is going to be a challenge, and unless and until RBI believes that the overall inflation, that is the headline inflation, is firmly anchored and will remain in the vicinity of 4%, it is unlikely to relent and do anything about the policy.
Okay.
The policy rate.
Rumki, is that a view that you share, that as far as RBI is concerned, nothing before the end of the year?
Yeah, most likely, because one, inflation is a concern, as the other panelists mentioned. Also, the Fed may also not taper interest rates as fast as what was expected. So the RBI will have to do the balancing act as to keep the interest differential, so that capital flows come into the country. So if there is lesser expectation that the Fed may not ease before the end of this year, then obviously RBI will also will hold on to the interest rates for longer, keeping in view the uncertainties. And also, if you notice that we saw the GDP GVA difference, which means the production side is not making up with the demand side of the economy, which means there is a possibility of overheating in the economy coming forward, because the demand is increasing and production side is not able to catch up. So all these factors will be taken into consideration before the RBI decides to ease policy rates, and that may not happen anytime soon.
Okay. Sudip, the final word on the show to you. And when we discuss market movements, it's just like our monsoons. It's best to take a long period average view, because there are blips, ups and downs that keep happening, and they distort views if you look at it too closely. So what would you say to our investors, that if they were to take a medium to long term view, what is the kind of return they can expect from the markets?
Well, absolutely positive. We have been very positive, and we believe that medium to long term, Indian markets will give fantastic returns. Structurally, things are going right. As I said, the only factor is oil price, and that's something which is beyond our control.
But Sudip, what about the return? Sudip, what about the return of Prime Minister Modi for a third term? Is that already factored in, or come 4th of June there is going to be a fresh rally only on account of the Modi magic?
Siddharth, is pretty much factored in. I think the market is fully factored in BJP's return to power and Mr. Modi's return to power. The question is how many seats and what kind of majority and all that. And there also, I think, some people are talking about 400, 350 and all kind of numbers. As far as, serious market participants are concerned, it's very clear. 272 gives you majority. As long as you have 272 plus, you are good to, run the country for next 5 years. So it doesn't matter whether you are 325 or 375 or 350. Of course, it gives you a little more strength, but fundamentally nothing changes. So 272 plus is not an issue. That's what the market believes. And 4th June, yes, if the numbers are significantly above the 272 mark, there may be some euphoria, but that will be short-lived. That's got nothing to do with the fundamentals, and I think BJP's win is already factored in.
So viewers, you got a comprehensive view of what to expect in this quarter, at least April, May and the beginning of June. Many of the factors, many of the M's working in our favor, and I haven't even brought in Moody's, the 6th M that we could add to this list, but we'll leave that for some other time. For now, it's very clear that external turbulence is perhaps spoiling the mood, but when it comes to the most important thing, which is the rain gods, they are likely, most probably, set to smile on the Indian economy, and that could not have been more better news. Sudip Bandyopadhyay, Sunil Sinha, Rumki, thank you very much for your time, and you, the viewer, for tuning in. We'll wrap up this show and come back with more. Do stay tuned in and give us your feedback and send us your comments. Until we meet again, goodbye.
As one of India's most diversified conglomerates, the Aditya Birla Group has constantly and consistently been at the forefront of India's